Hi, Damian Mason here with more of my 5 thoughts for agriculture post-election 2016. In the first video, I talked about the regulatory environment. Now we're going to talk about interest rates. The cost of money is poised to rise. Frankly, the Fed, Janet Yellen, they've been talking about higher interest rates for several years now. The time has come. And actually, Donald Trump is for higher interest rates. Sure, it might hurt the economy just a little bit, but let's face it, he believes cheap money has created an artificial bubble, and perhaps it has. What's this mean for you in rural America where we produce food, fuel, and fiber? It means that grandma's CD at the community bank is finally going to fetch more than 0.2% interest, but it also means when grandma dies, her farm's going to probably sell just a little bit less than it might have because the cost of buying that farm went up with interest rates. Obviously, higher interest rates correlate negatively with land sale prices. But don't blame interest rates for the decrease in farmland. Iowa State University in 2016 said we're down 22% from the high. I predict there's another 15% of downward pressure on agricultural land. Let's face it, we 2 to 2.5 times land values. Going down 35 or 40% would be reasonable in this commodity price environment. I wouldn't sweat high interest rates in agriculture. The days of 18% interest are not coming back. Even people with a credit score of 500 don't pay 18% interest. We lived through the 80s. We know what 18% interest looks like. When I bought my first house in 1996, I paid 7.25% interest on a 7-year 23 balloon. You know what? We thought we killed it getting 7% interest. Now we're talking about maybe 4, 5, 6. We're going to be just fine. Frankly, interest rates are not going to be the problem for agriculture that they were in the 80s. We're never going to get there again. Don't sweat it. You know what you've got bigger concerns with? I think operating money. Karma's a bitch, as they say. You know what? A few years ago, you didn't need operating loans as a farmer or rancher because you were knee-deep in cash. But you could have gotten an operating loan for pennies. Now, you need the money. It's going to cost you a little bit more. Tighten up your purse strings. Manage yourself a little bit. Interest rates aren't going to be your problem. I'm Damian Mason. I talk about the business of agriculture. In my next segment, we're going to talk about immigrant labor.